When it comes to trading futures, funded accounts, or whatever it may be, I don't know if it's you or if it's just me, but it's like everything that I see as far as education and how to trade out there is all around ICT. And don't get me wrong, I'm not saying ICT is terrible. I know traders that are successful using it. But the question is it as simple as everyone makes it sound? And then the other part of it is it the only way that you can really trade? And if it is the only way you can trade, why aren't all these traders profiting millions? Why aren't prop firms all going under? Why are they still making money? Are they really copying your trades or not? Because you're not in a live account, most of you aren't. But again, things to be thinking about. And so I want to practice understanding how I trade and how I think you can still make money trading futures, a realistic approach of how I attack the market, right? And basic fundamentals that you can understand when looking at the market. So you can have a real example of understanding why action is actually taking place, not just drawing zones and just saying, oh, well, this is what the market should do. This is my bias. You have to understand, no one cares about your bias or how you feel about the market. All that really matters is the volume that's coming in and what's actually taking place out there in the market. No one cares about your opinion. Everything can change at the flip. Now, before we get into my strategy and what I'm looking for, I want to explain my logic behind how I trade and how I view trading. In my opinion, and some of you may agree, some of you may disagree, I view trading as a form of gambling. And before you judge me, just think about it. When you're looking at the market, you're essentially betting if it's going up or going down. The one thing with trading stocks versus gambling on sports or whatever it may be is that you can kind of look at the odds and they're always going to be consistent of how much money you can make. If you go up, 10 ticks on the NASDAQ, you'll make $200 per 10 ticks, right? Go down, you'll lose $200 plus or minus some fees. But the thing that is controllable and the thing that gives you an edge, we always talk about in trading, is what you're looking at and how you're interpreting that chart. So these are things that I'll be looking for. And all the things I'm breaking down are things that slowly give me a better chance of success. So let's say that when we go into a trade, there's a 50-50 shot. If I just close my eyes, throw something at the wall, 50-50 gonna go up, gonna go down. Now, there's things I can look at with the chart and then I can slowly get that percent and tick it up. So the odds are still very good of making either 200, losing 200, whatever it may be. But I can also get the odds slowly in my scale, slowly in what I want to see. And this is one of the only markets and the only things in the world where that's actually true. The casino is always rigged so the house has better odds than you. And that's the beautiful thing about the market. And that's how I view this as a whole. I know eventually I'm going to lose. But the question is does my strategy consistently give me a tick or an advantage over the house? And can I actually spot those breakouts of what we're looking for consistently over time? And can I backtest that? So anything that I talk about in this video, I recommend that you go back. You chart it for yourself. You start to put in the work and understand for yourself. And one thing that I'm not going to mention in this video, I already have an outline written out, is journaling. But journal why you get in and why you get out of a trade and what you traded. That is it. Start there and you will slowly realize what you are doing wrong with your trading or where your strategy sucks, right? So that's what you will understand, being a winner versus being a loser. That's very important to understand why and how I look at the market. Now, how I'm going to explain this is I'm going to break down how I view this, my strategy, and I'm going to explain how I implement my strategy after. So I'll go a rundown of everything I use, how I view the market, and how I aim to make money every single day with the tools that are at my hand, right? And then after that, I'm going to go over how I view these and kind of the mental aspect behind them of how to execute it as well, and things that I think, give you that slight edge and tick up on the market. So again, let's run through this very quickly. And just to let you know who I use for my trading, I use Top Step. And I think right now, if you're just starting, I think my funded futures is the best option right now. Again, I do have an affiliation with them, but it's like small, like a 10% affiliate code. It's nothing major whatsoever. So I want to let you know that right now. You can use code JEFE, JEFE, all caps, to get any type of discount if they're having one. But again, Top Step, if you're going to get funded, it's like $200 for a 50K account. Once you do the activation, it's only $80 with my funded futures. So again, if you're interested, link is down below. Check them out. So I have more coming up. I use Tradeify as well, but that's a little bit more expensive, but I'll let you guys know more about that. So I want to make sure you guys know who I use, why I use them. And that's all based on getting paid out efficiently and very quickly. So number one there. Now, first of all, what we're going to do is cover the indicators. I think this is probably the most important part of what we're going to talk about. And a lot of what you're going to really ask about. Indicators, before I go into them, do not tell me when to get in. They don't. They give me more of an edge of things I should be identifying in the market, right? They're really like flashing lights for me. Imagine you're driving down the highway and you see a caution sign that's kind of like flickering. You know there's something that you should be looking for. That's what indicators do. Now, we're going to jump in. The first thing we're doing, obviously we're on NASDAQ, so for all you guys out there. So NASDAQ, indicator number one, I say this all the time, EMA, going to go here, 9 EMA, okay? You're going to get EMA, it should already be set to the 9. I leave everything the same, keep it in my chart. I'm going to go over, it's always red on all my videos, so if you want to have the same as me, that's what I do. 9 EMA. I have a complete video going over this. It's probably my most viewed video on this channel from like a year, 2 years ago. Again, how I use the 9 EMA is specifically on the 5-minute time frame, sometimes the 1 minute. But again, when you're really getting a nice trend. But you'll see when you get big breakouts like you did here from basically the end of the day on Friday, you'll grind above that 9 EMA, and all it uses for is continuation of understanding the trend that's actually happening there. When you get action like where you're going through it consistently, like you had a decent drop here, grind it down, you start chopping through it, not great action to trade. Right here, not great action to trade because you're not respecting that overall trend of what's happening there. I have a very good video that breaks it down, goes a lot more in depth. You can also use it on the 1 minute for quick scalps, 10, 20 points. Again, you'll notice you start bouncing back over it. You'll grind above. Again, I usually use the 2 to 3 candle rule. You want to get 1 candle below, 2 candle to really confirm right here. So right here, you never got 2 in a row until you eventually pop back up right here. And that's when the action really gets shitty. And you get 2 candles above, good continuation. Again, I use this in combination with other things in the market that we're going to talk about here in a second. 9 EMA, very good indicator to be using. Recommend it specifically 5 in the 1 minute time frame for scalps, not long-term swing trades or anything like that. Okay. Number 2, VWAP. I would argue the VWAP is the second most important indicator out there. 9 EMA is not the most important. VWAP is the second most. I'm going to save them best for last. VWAP. Now VWAP, for some reason on TradingView, I'm using TradingView. Again, you can use it if you want. Again, it'll add like up these upper bands. I get rid of all that. I don't need bands. I don't need nothing like that, right? What you're gonna do here though, make this very clear. Let me make the line a little bit. I like it a little bit bigger, but it's not getting bigger. We'll go into right here. Yeah, right there. So I like it a little bit thicker so you can see VWAP. The best way to explain VWAP. This is the aggregate volume that's coming in to the equity stock, whatever you're looking at. This is where a majority of volume is taking place in the market. So it's important to understand during the beginning of the session, which starts in Asia's market, right when our market closes at 4, it reopens at 5. That's when the VWAP resets every single day. It will reset every day and it'll start accounting more for the volume and the action at place, right? I want to make this very clear. I could argue this is the best indicator that you're going to use. Okay. And again, I'm going to tie it all together here in a second, but you're going to notice you will get your largest amounts of volume and your best reactions off of the VWAP consistently, right? Especially during New York session and market hours, okay? So you might see some chop and consolidation there sometimes. And I wanna make something very clear. When you are not respecting the VWAP to where you're just going through it nonstop, that is a bad session to trade. That is a bad time to be in the market. Why? Because you're not respecting where the most volume is coming into place, where the most buyers versus sellers are at consistently, okay? A great example, coming back here, I'm just using random examples at this point. You get above it here at 10 a.m., 2 hours in the market open basically. You hold above it from 10, 10:30, 10:20, break up. You come back down, you hold it again, and you basically remain on the upside for the remainder of the day above the VWAP. The VWAP has a great understanding if that trend for the day is bullish or bearish, right? It's the best understanding. Typically, if I'm operating above the VWAP, I want to trade the upside consistently. You can also see here, use the VWAP in combination with the 9 EMA, consistently moving and grinding up as well. Again, the 2 candle rule, 1, 2, kind of flipping trend, getting a little choppy. And you can see we kind of don't respect the 9 EMA all the way there, and we eventually flip back down. A good thing to be looking for as well. So again, how we're interpreting the indicators and what we're looking for. And you're going to notice when it comes to my trading, I love volume. Because when you use indicators as a whole, whether it be random EMAs or the Bollinger Bands, Fibonacci, I think all those are pretty trash, to be honest, especially for futures. Volume is the one thing that is constant and that's real time that you're getting. You're getting exactly what's happening in the market. A lot of these other indicators are dated. Like you're not getting them till way, way, way later. And so that's very important that we don't want to use past information. We want to use information that's right in front of us right now. The next indicator. Now, again, this is kind of cheating on my end, but I have a personal indicator that was made by Lux Algo. You can check the link down in my bio if you want to use it. So it identifies buyers versus sellers. So it's a little bit easier and more clear. Okay. Now there are some free workarounds for this. Thinkorswim has a free version of this, right? I liked Thinkorswim so much from back in the day that I had this custom made on TradingView. You can also just use regular volume. But again, I like to be able to identify buyers versus sellers. It's huge. Now, this is one thing that I think people make an issue with, right? So when I look at volume here on the 5-minute, you see some spikes, but it's not, in my opinion, incredible, okay? Now, if I go to the 1-minute, this is where I get more of my answers, okay? This is very important to understand what's taking place here. I'm able to see actual spikes that are taking place in the market and reactions. So what do we see here? We see your largest amount of volume comes in at this point on this quick dip, and it's primarily sellers. Sellers, in my opinion, were overexhausted. Strong bounce typically is good for the overall market, just that sellers couldn't get continuation. You kind of get chopped volume here and then eventually pop back up. You'll notice this kind of happens time and time again. Sellers again step in aggressive here. They get exhausted. Nothing happens. No continuation, right? You keep popping up to the end of the day. We have more videos on volume as well to really break down that viewpoint. But volume is going to be the one indicator that will actually give you entry signals or tell you what's happening in the market and really give you that confirmation when we use an tangent with these other things as well. Now, before I go into the next steps, I do want to give a special shout out right now because we're going to be doing our Black Friday sale. And I always want you guys to know that you never have to pay for anything. That's why I make these free educational videos. But if you want to get one-on-one help working directly with me, Jordan, how we trade, this might be for you. So if you want that assistance, that one-on-one, this is the one time we do this throughout the year, so you can check it out. And again, you can sign this. The link will be down below. We get some of your information. We're not going to spam you. Again, we have a little disclaimer here. But again, we're just going to give you an update to when the Black Friday sale goes live. So if you're interested in doing the mentorship, we're going to do a 3-month long process from December into basically February, breaking down everything, early morning sessions, going over the market, what we're looking for at the beginning of the day, the end of the day, everything along those lines. This might be for you. And again, we do not offer this ever. If we go to our normal website, right, everything's sold out as of right now. But again, we don't do mentorships ever. People ask about this all the time. So if this is something you're interested in, take advantage. We also will have the Discord sale going on. So it's going to be I think 60% off on Monday. And we'll have a specific amount available. So if you're interested, the link is there. But I always want to let you guys know, this is why we have so much free education on the website as well, is if you're willing to put in the work by yourself, then go do it. That's why we have all this stuff here, breaking things down for you absolutely free. I wanted to be, first off, have the availability for you guys to do it on your own if you don't have the funds to do it. And that's why we make this stuff. I relate with you guys so much. I was a single dad and, going to college, paying child support, trying to figure everything out, living in the back of my parents in their pool shed, right? Or pool house, right? But again, I understand what it takes in the beginning, the grind, everything like that. Lucky enough now to have, we built our house that we love. We have just got my new son, right? So it's a process. It's not going to happen overnight. So if you need that free stuff, it's always there for you. You guys, my DMs on Twitter, they're always open. If you ever have questions, you can ask anyone. I respond to almost everything. So make sure you check that out if you are interested. Now I'm going to get rid of these indicators and just make it clean. I like to have a clean chart, guys. I like to have a really clean chart. I missed out on the 200 SMAs, but it's not really for day trading. You can watch the video going over that as well, but it's not for day. I want to go specifically, if you're just day trading futures, what I'm looking at, right? Okay. Now, number one, we're going to go in and break this down of key levels. This is everyone's favorite thing to ask when they're watching our videos. How do you find your levels? And if you guys follow me on Twitter, again, you will notice that this is a consistent thing with me and Jordan, especially, right? Is our levels, we break it down so much, how do you have these levels? What are we looking for? Everything along those lines, right? Let's break it down. Now, I want to let you know, again, we have everything I'm covering. We have in-depth videos on each specific thing, and I'll probably make an update video on them eventually, okay? But right now, number one, key levels. When we're looking at key levels, it's always a top-down approach. Now, typically when we're scalping things, obviously I'm using small time frames. But when I'm breaking things down into key level format of finding where significant points of volume are taking place and where buyers and sellers are getting active, I have to go to higher time frames to look at previous swings And always you have to understand higher time frames are more respected than smaller time frames. So again, that top down approach. Now, me and Jordan have a little bit of a back and forth. I don't really like starting at the weekly because it's just a little tough, but I see Jordan's, respective answer there. But you'll see when we go through this, like you see there's a little wicks there. We'll go more into why I'm looking at that, things along those lines. But again, I like starting at the daily and then working my way to the 4 hour. That's my favorite area to start with key levels and what I'm always looking for. So let's understand that first before we go too far with anything. Now, what we're looking for here, we're looking for one, previous highs of trends and when things have flipped. Because what do we know? Let's make things really clear. Very basic, charting. What's the definition of a bull trend? Higher highs and higher lows. So basically from April of this year into essentially, July, all we did was go up. So it's consistently over and over and over and over. In theory, what you would love to do before every pullback you had here, this is a daily time frame, is you want to mark out all of these previous highs here as well that you made before you had a pullback. And that's what you'd really love to see. And all-time highs are obviously your favorite, your previous all-time high right there. That's your favorite. My favorite thing I'm always looking at. The next thing I want to do is mark out the swing lows as well, right? Just very quickly running through this does not require a lot of work. Very, very, very simple of what we're looking for. Now, for beginners out there too, I want to make a rule for you. If you're like, hey, I don't know if I got this level right, this or that, whatever it may be. Okay, that is fine. And we're going to go through and look at all these levels. There's a zone rule here too as well. And this is something I recommend for beginners. Get your area, get a little bit above it, a little bit below relative, and just mark out a zone. Okay. Again, just really quickly. Now, and we'll go into exactly why of what we look at those zones here in a second. So we're just very quickly going through this, right? Just so you can identify and understand. We're going to be on the 5-minute time frame, small time frames. So we're going to, it seems like a lot, but you're not going to see these levels all the time. And that's the beautiful thing about this, of what we're really looking for, right? So just really quickly going through marking these really quickly. Now, I'm not going to go through all these, but that's where we're at right now. Okay. So looking here, what do you see? A low from April was retested exactly there in August when we had the big, the carry trade going on, right? Previous highs here, guess what? They were just respected here on NASDAQ 4 months later, 6 months later, whatever it may be, right? Previous high here, were just respected this week. The previous highs from June, right? June, then you had July here. Just respected all week long here on the NASDAQ, right? Clear as day. Can't argue it. You can't argue what's happening there. So again, zone rule. You're going to understand, I like to have room for error. And this is something that I always tell people, is you have to understand you are going to be wrong. I'm going to be eventually wrong. Like, it's just a part of it. Like, and then you might just get bad news. Like, if tomorrow Vladimir Putin says, I'm going to nuke Ukraine. Well, the market's going to tank. Like, and my levels won't matter too much, or at least the levels are very close to me. Now, the levels way down here might really matter, 17.6. Like, that's a huge, massive drop. I don't know how much a nuclear bomb would tank the market. But again, that's what I'm kind of like looking at there as well. So you have to prepare for the worst, prepare for the worst. And if the best happens, then awesome, right? That's what you're looking at. So again, things you're looking at consistently, going through those levels of what we're trying to identify. Now, again, when you're trading these, the 5-minute small time frames are your best friend. Now, I said the daily and the 4 hour. Now, I go in from the 4 hour time frame. Now, what I want to identify here is just like similar thing to what I said. Now, you might go through here and you might just have a ton of levels. Like, you have to understand that. Again, go through there, and you can change these colors if you want to make them easier to understand, easier to see. Again, you can make these ones white, for instance, just so you know they're on the 4 hour. So again, what does that mean if the 4 hour versus the daily? The daily is going to be more respected. 4 hour is less respected. But just quickly identifying the ones right here that we're looking at right now. Now, what's happening here? We'll go to the 5-minute because this is where you're day trading. This is where you're scalping. Look at these reactions. Now, again, sometimes you get chopped through them. And again, I want to bring up the VWAP just to prove a point. Okay. Now, what did I say earlier? When you're moving through VWAP consistently back and forth and you're not respecting it during a session, it's not a good trading market for me, because you have no clear trend. You're not respecting the underlying trend as well. And you're going to notice that VWAP type of action happens usually in the overnight session. Okay. So again, trash action. You're also going through a key level, right? But what happens here? Okay. You're respecting VWAP the 21st of November. You break up through your key level, which again, you rejected at right there. You broke, retested your exact point, your key level, pushed back up, sat there in the overnight session, and then chopped through it all night. Bada bing, bada boom. Market, this 3 a.m. London session, drop down. Again, chop. Market opens up. Again, still indecision through VWAP. And then guess what happens? You start respecting VWAP around 11 o'clock, respecting VWAP, holding your key level as well. Very bullish, combined with the 90 MA, boom, boom, all that coming in there as well at the VWAP. Combining with the key levels of what we're looking for. Are we understanding what we're looking at now? Again, people always say, well, you're just making up levels. Again, all I'm doing is going back to previous data and understanding where buyers already have shown up. And this isn't retail buyers. I need to understand that too. We're talking about the NASDAQ 100. Like we're not talking about a Dogecoin or Shiba Inu. Like we're talking about probably the most traded thing in the world, the NASDAQ, ES, the Dow. And so you want to have that respect. And this all goes for Dow as well. You'll see all my tweets and things like that. I'm just for the sake. This is going to be a long video, so I'm trying to respect that as well. That's what you're looking at right now. And so again, you're going to notice time and time again, these things work out and these things are what you're looking for. So again, the daily, the 4 hour, that's what you're looking for. Okay. I'm already spending way too much time here. Okay. Supply and demand. And I'm going to make this quick because I got to get to my best part, which is going to be patterns and volume. Okay. So really quick, again, like I said, I'm trying to make the video not too long because I have all these videos as well on the channel, supply and demand. So really quickly, I'm going to get rid of this. Now, very simply, I'm going to explain this as quickly as possible. Supply and demand, what we look for, and the rule that we use is a 3-bar rule, okay? All you want to do is identify when you get good action, a breakout, clear, there's areas of illiquidity where you shoot up and there's just not a lot of, chop. So, you can go back through that very relatively easily, right? And understand where you based and where that action was. Simple enough, right? Sorry, a little hiccup there. Again, so 3 bars. 1 bar is obviously your volume, your big one. 2, 3. And so what you want to do is the body of the opposite of where, like going into it. So the body there into the low of whatever that wick is down there, which would be the wick right here, whatever it may be. This is now a demand. Okay. Again, going back here, right here, this right here, again, 3-bar rule is a demand, what you're looking for there as well. So again, you're going to actually be able to see what happens that takes place here, right? You end up getting action. You kind of chop here for a second. You're chopping and you're forming a demand. You shoot up, you kind of chop, you come down, you almost hit the tip of it, you push up, come back into it, shoot back up. Demand. Simplest way to understand what's taking place there. And this happens over and over. And then this is the best type of action you can get in the market actually. So again, body there, going down, 3-bar rule, quickly understanding what's taking place. I wouldn't draw one down there because you just literally bounced right back up. Wouldn't draw one down there because you basically just bounced right back up as well. Tough to draw it there. Okay. Again, so that's what you're looking for preferably. Now, this is on a daily time frame. And again, top-down approach, same thing as the key levels. Understand that. Why? What are we looking for, right? So if I use a 4-hour, again, can't really change the color too much. So you can do what you want, chart it, put like a little font on there if you need to see it. But understand what you're looking for there. The daily, weekly, those will be the most respected. The weekly demands are typically what you have to stay very focused on and being like, this shit's important, right? So we want to understand. And that's why when you start getting chopped like this, where you like might move like this right now, and you get a few weekly candles kind of trading on top of each other, I'm like, dude, this is what you want because you're creating either a massive resistance or a massive support. And it's always going to be like your best bet, what's really going to get you going. And a good example is, what's happening here in the market as well and how you can flip those. The one thing that's different between key levels and supply and demand, whenever you break through a demand or supply level, understand this, okay? And the supply rule goes for the exact same towards the top, okay? Understand this very simply. If I get a wick through this and we come back through it, this demand is invalidated. It is gone. You take it off your chart, okay? Key levels remain forever. They stay there. You don't have to chart them ever again. They're there, okay? You save them. Understand that, right? That's why I always say when you go to my Twitter, the levels will always be the same. You don't have to do any more work. You're good to go at that point. Okay, now patterns. Quickly running through this, okay? Number 1, you have the bull and the bear flag, okay? And we need to understand, I want to make something very clear. These are going to be continuation patterns. What do I mean by that? A continuation pattern is something that only moves in the direction of the underlying market, what's taking place here, okay? So if we're moving up, we're in a bullish trend. So I only want to use a bullish continuation pattern. I would not use a bearish continuation pattern. So if we started making a bear flag here, right? I'm not going to say, oh, it's a bear flag. Let's trade the downside. That is dumb. That makes no sense. Okay, understand what's taking place there, what you're looking for, and that's relative to your 1 minute, 5 minute, whatever chart you're looking at. Okay, so number one is going to be the bull flag. Very simple to understand. It's just like this. That's how you trade. That is a bull flag. I'm going to use an equity for an example here, or an ETF, which is XLF Financials. Very simple to understand because it's literally like the cleanest chart with bull flags right now. Again, nonstop bull flag, bull flag. I do not use bear flags here or even think about using them. Why? Because XLF is going straight up. Number one, understand that. Okay. A bear flag. Let's look at an example for that. Okay. I'm kind of tough to understand what bear flag is right now because honestly I have not been identifying or using any of them lately. But I think XLV, I just went to the weakest ETF I could think about. XLV, healthcare, right? You've topped out, right? You can see what's happening here. You've made a clear top over the past few weeks. You have RFK coming into office with Donald Trump, and the market is not liking that. Previously, you were just pushing up, and the smaller 2-hour, 4-hour trend, you are pulling back. As you can see, the trend has flipped here, okay? Now, what's taking place? You can just see you are just, that I wouldn't consider this a flag. It's going to be very tough, right? But if you come in here, you can really see what's taking place. Let's actually pull up the 90 EMA just so you can really see as well. I already knew it was going to be there, but you can see this is ideally what you would love to see here on a downtrend. You're flagging, bear flag, into 90 EMA, breaking down. Bear flag, 90 EMA. Now, this is where things tie in together, okay? This is where everything ties in together as well. What I said, volume is the only indicator that really gives you signals. Volume, 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 okay? Understand this. So what happens here, and this is a 2-hour time frame. Again, smaller time frames give you better visuals or breakouts, okay? So right here, you're bear flagging, hit 90 EMA, increase selling, pushes you down. Clear entry signal, right? And so smaller time frames will give you better instances of this happening, right? So you want to see higher volume when you're breaking out or you're reversing. Those are the two times you need to see high volume. I don't need to see high volume when we're getting continuation. So if we're just going straight up and not really pulling back throughout the day, I don't need to see high volume, right? Because sellers aren't stepping in. So it doesn't take much from buyers to push us in. And the same thing for downside. If we're just falling down, we don't need to see nonstop high volume on selling if no buyers are stepping into the market. That's why you're just able to fall so easily. Now, the initial spike might be a news catalyst that really jumps you off there. But again, it doesn't have to remain the entire session. Very important to understand that. So when I'm using these patterns, it's important to understand that I'm tying them directly back in with volume. Okay. Very, very, very important to understand that. Now, the only other pattern that I will use when it comes to continuation, bull and bear flags, and then again, ascending and descending triangles. What is that? So an ascending triangle looks like this. You form a flat top wherever it may be, and then you're making higher lows. This is an ascending triangle. And ideally what you're looking for is action is moving like this inside the triangle. You're hitting a wall, and then you want to see a break, a retest, and continuation. That is what you want to see. Sometimes you'll go straight through it. Sometimes you'll consolidate there and break out. Another good example of this is on a higher time frame of XLF, right? Clear cut, you can see what's happening. Higher lows established for days, flat top, breakout. Again, when we're using this on the NASDAQ, it's gonna be smaller time frames. But I'm using the best examples I can show you right now off the top of my head, okay? Great, great, great example of what's taking place, what to be looking for. I don't know any real descending triangles right now because the market's just moving so damn good. But again, that's how I'm looking at this, right? And you want to see increased volume on the breakout. Again, I'm just going from the top of my head, but as you see, volume here, and this is on a daily time frame, so volume is going to be less volatile, as you can see. But look, less volume, you break out here, volume spikes. It's higher than 5 days of higher volume than you had for almost 10 days, right? Nonstop. And then you break out the bull flag, increased volume, as you can see, still pretty increased as we're going right now. Now, when we're looking at all this and you're trying to say, well, Tyler, how do you piece this together? I think I explained it as in depth as I possibly could for the time being. Again, we have more videos that will demonstrate this. But again, like I said in the beginning, I view trading as a form of gambling, and this isn't like some profound thought. This is just, I think, the simplest way to explain it. I'm using everything that I just explained to you, key levels, volume, supply and demand, everything along those lines, to give me any sort of edge of telling me where the market is moving, the underlying bias, and then getting breakouts and continuation into our next level or our next overall target. And that is ultimately how I view this. And so when you're putting yourself in the best position to win, it's usually because you're putting in that preparation and you've done the work behind it. And so as you can see, it's detailed. It takes a little bit of time. But I'm going to tell you right now, as you do this over and over and over, it gets very simple and very easy to identify what's taking place in the market. Now, the one part that I can't help you with is going to be your mentality. Your confidence and what you're looking at. But for me, I have to understand it's a numbers game. That's ultimately what it is. And so when I'm looking at the market, looking how we're trading, again, I can backtest this and know that this has worked time and time and time again. And I recommend that you do this. It's free to do. You can go do it for yourself. But again, you're going to see that the more you practice, the more you pay attention, the more and more and more it works. Again, it's not just based off of just saying, well, I hope this candle reacts the way I thought it would. No, has it reacted before? Have previous buyers stepped in before? And has the market seen this type of action before as well? And then using that data that you're getting to make a educated decision as well for your trades going forward and what you're looking at. It's not a get rich quick scheme. It's how I look at the market, how I identify it. And I want to make something very clear. If something's super complicated and there's 5 billion different videos explaining the train of thought and the rules, typically from my experience, when something's overcomplicated, it's typically because they're trying to hide something. Trading should not be that overcomplicated, okay? You have to understand, if you're making a fundamental decision about investing, then yeah, it takes time. You have to do research. But when you're looking at it from a technical viewpoint and using logic, again, it's not like that. So again, if you have questions, comment down below. Again, the mentorship, if you guys are interested, it's going to be available. Link will be down below as well. I appreciate you all. Have a good one, traders.